Friends, I'm going to do a quick stock market update. And I'm sorry I haven't done a couple, starting in a few days because I've been so busy, been having cell phone issues and been playing the cell phone shuffle. I'm not kidding you. This is ridiculous. So I can't do a lot of good charting work and stuff like that, okay? But anyway, so I wanted to give you an update real fast on where we are with the stock market. Now, this move up, this last one, is okay because, well, not, well, I mean, it's okay if you're on the right side of the tape, but it's okay in the sense that, you remember even months ago I told you that the market probably would pull back in February, the early month of February. So, second or third week would be a golden charm point for that. But anyway, so I have been holding the TZA the entire time and during this situation. So now it's starting to pay off pretty well, into this, especially this week. Now, here's what I want to show you. I told you there was a cup and handle. This is the IWM, which is the Russell 2000. And I'm sorry, I got this all boogered up here. But anyway, I can't do well because that's why I like to have a more normal cell phone, because I could do a better expansion and have this wider screen. Okay, but anyway, so this is going to have to work for now. But see, you can see this cup and handle. Okay, so I'm going to draw this. See this cup? So it makes a cup formation. Remember, I told you wanted to drag this way, not down. Remember on that video, you can go back and look at it. See how it's going down versus, see this arrow here. I've got arrow on arrow. But see how it's dropping immediately down on the cup versus dragging out to the right. So that is a bad sign. So that means that the cup, the handles can get broken here. And it's going to come down versus actually, oops, I got an alarm just in case if I fall asleep, because I get up in the early morning through the stomach thing. I'm already out on the roads this morning because I had to wake up early and make sure that I got so many things to do. I got to get downtown. Okay, I should have stayed downtown, but anyway, it doesn't matter. All right, so focused. All right, here we go. So this goes down here, and so it should be dragged out here, right, like this. Okay. So you got this cup and handle formation, and now it's lost focus. Okay, so anyway, I'm sorry about that. So anyway, so you got this down handle like this versus coming over here. So that means the cup is not good. So what's going to happen here? Now, here's the thing that if you're short, like we got our position now, the only thing that's not really that good about this is, see this gap you have? Now that gap wants to be filled. Darn it. So now we got to play a game here. Keep an eye out for that, because I was hoping they wouldn't leave a gap open, but now remember, all gaps must be filled. Now they've got this gap there between that stick there, so we're going to probably see a price somewhere in here up there to fill that. So what's going to happen? I don't know. Maybe come down here again and then smack it and then follow through down here. But see, this up and down game, they keep floating out one Federal Reserve after another. It's all shenanigan games. Remember this, right? So we've got to pay attention to that they might try to fill this gap. But anyway, so here we got, I'm turning my markers here. I can't tell those numbers, but you're probably going to come down and hit this blue as it's curling up this blue line. See, what is that blue? Oh, that's 20-day moving average. That's perfect. They like to play the 20. So you see as you rotate this up and extend this out. So it might hit the 20, and they might do a temporary bounce and then bring it down. But I wish it would have been more clean and not have that gap. That gap could last a while though. So, it could go down here. So what we're going to look for is this spot here. And also see that green stick there? There's a heavy distribution right at the top. Boy, they unloaded on somebody, and also probably some short covering. Now, we don't have the best candlestick. You usually want it. This one is a topping action candle, by the way. So it looks like how it, it's called, it's a doji. So what happens, you had this, it came down and then it sold and went back to there, it was a higher stick there. See, it's like a dynamite stick, okay, which is not bad. I like more of it to have more of that bottom, more look like this, like that, but it's still good enough to be a topping candle, okay. All right, so also, okay, so I'm gonna keep moving. I'm sorry I'm taking so long here. I'm just trying to get moving this morning. I'm just constantly on the move. So here's the MACD. See this MACD, how it does this action? Now remember, once that purple comes through that orange line, it's going to be a soft. So we are talking, that's a terrible draw. Here we go. Here is a line there. So that's probably where you get to meet the 20, and that's going to hit right in there. So, and then that's probably when it's going to come down off here. So my point is this: it's already set up for a rollover because the MACD is rolling over now. I don't see how that MACD is going to hold. It's going to roll over, my friends. So that purple is going to come through there. We're going to get the sell-off and this and that, right? And it's probably set up just in time for that. Like I said, I've been saying that for like 4 months, not to keep repeating that, for February 2nd or 3rd of February, okay? All right, so let's go on to another thing. So like I said, there's the MACD crossover, okay? All right, but boy, this ramp, boy, look how steep they ran this thing. Boy, they took it, there's a lot of short covering. They put a lot of pain on the shorts. Anyway, so keep an eye on this cup and handle. So what it is, like here will be the breaking point of that we need to watch. Sorry, I keep, like I said, that is going to be the breaking point for the cup. Okay, so we already got that. Otherwise, it would have been this and it would have gone up. So I keep going on about it. Sorry. All right, so let's move on. The one more I want to do the VIX real quick. I told you that the VIX, you wanted to grab the VIX below. You go long the VIX when it's underneath 20. It hit 18 about yesterday morning or something, and I said, "Oh my goodness." I can't remember what it was. Somewhere I said, "Boy, that's when you want to go long." You can buy those instruments, but I don't like the instruments of the VIX. You know what I mean? You got I got some friends who were trading that, and they started buying into UVXY and some other UVXY. Oh my goodness! Look, you got the VIX curling up. It's going to break through that purple through the orange. See how quick it's curled? That is, and it's going to come up here. So you got another move. The VIX. Remember, this is the fear gauge, and when that thing goes up, markets go down. So this is going to be. Let's see where now. See if I can see where it's at. Let me move this out of the way here. And let's see. You got the 50-day moving average. And look how it perfectly. Now VIX you don't use moving averages and stuff like that much for VIX because VIX is more of a wave formation. It's not like a stock. So you got to realize that moving averages are okay, but they're not really that. The more the pattern. The pattern is more important for the VIX than anything. The pattern, the MACD, those are the key because a MACD is a wave formation. Remember, so it's a wave. So you got to follow the wave, right? So anyway, we got that move up and look at this. It didn't even leave a gap up, so that is nice. It gives it a lot of room to keep moving up. So, like I said, anything above 22, I like the 25 range here as a maximum point, but some people start stepping out before that. 23, 24, like you saw previously. Let me move this over. See, like they're 20, this previous topping here, the 23 area. But I think on this run, we could see 25s coming in the earnings season. But we'll have to see how it goes. So let's not get ahead of ourselves too much. But like I said, I'm more pinned into the MACD that's going to cross through the purple through the orange there that we talked about. So right there's your point. So we should see this kind of something like this and wander up here to 23 area or something like that. Okay. What else is important? I tell you. I tell you what's really, really amazing about this is, so we got the VIX. Yang, I stepped out of that trade. Yang was a crazy, I think, boy, that one's a nasty. I think I'm going to stay away from China market because they can manipulate that more than ever. I've never seen such manipulation in China. And boy, I tell you, China, Yang is the opposite. And I tell you what, that thing is just insane. So there are so many gaps up. I have no idea how this is going to pan out because China is just been. That's why I don't like international markets. Why I don't normally trade them because they're hard to track. They can be more manipulated and all these other things. But Yang, seriously, this thing is way. Oh, look at that! Oh my gosh, that has one nasty panic candle of volume. Look at that stick there. Happened right there, right? So this is probably going to fill a gap up here, so it's going to come up here. So you can do a swing trade on that and take the profits all the way up into that first gap. It's going to come up there, right there. See that gap right there, around $10 at $11, which is actually probably, see at 8, that's already like a 20% run, something ridiculous like that, okay? And you've got the MACD it's going to come to the zero line. So it's already moving up. It's going to hit that zero line. So how far it goes, usually it'll crack at least a little bit through that zero line. So you can watch the MACD. It did its cross right. We had a cross there. And boy, I only had a temporary, well, I didn't quite right. A temporary get out up there, so we could have got out at profit. That was tight. But anyway, here we're crossing, it's going to cross about here. So right here, it should, like I said, fill the gap. Anyway, all right, so that's that. What else is important? Oh, natural gas, boy. Whew. I'm not knowing where I exited natural gas. I got lines everywhere. Natural gas, there is just no bottom in this thing. So you could actually probably go long natural gas and be okay if you wanted to hold. But the thing is seasonal. You might have to hold it. Oh my goodness. Coming in the spring and summertime, you might have to hold it for a while. Yeah, because you're running too late for the seasonality to be a good profit. And but there's so many gaps too on natural gas. It's trading at 10. So you need to come down just a little bit further, surprisingly, probably about $8 before I think it's worth the risk. Because you're going to need a little bit of a move, right? But I don't think you're going to see way up here again. I think they've taken that away. It's bad. So you might get up to around 15. Especially, and I am not good at natural gas because I haven't never traded much. So it's a hard one for me to but look, oh, you got the MACD turning on it. But here's the problem is, you got the markets falling, and these commodities they'll fall with as the commodities fall, so will the stock market. I mean, no, as the stock market falls, so does commodities, because they start selling everything, they throw out everything, right? So that's where I wouldn't go long natural gas, just because we're seeing the market pull back. That this thing might trade in this channel here for a long time before anything turns, and so the risk to reward is not there. That's what I'm getting at. Okay, all right, that's it. I appreciate because this gives me value. Appreciate you listening to this video, because otherwise I'm just going to do it. But it helps me do it for myself. But I appreciate that, that somebody's out there and wants to hear a little bit of different opinion on it. Remember, this is just opinions, and we all make mistakes. But you only got to have a batting average about 50% to be a winner in this game, right? This would be 50%, right? So anyway, all right, take care and God bless y'all.